Welcome back to Explain the Charts, and today we're going to dive into the exciting world of Bitcoin, analyzing both the recent news and the chart data to give you a comprehensive overview of where this cryptocurrency might be heading next. We're seeing Bitcoin making headlines again, with the market experiencing a frenzy fueled by Trump's re-election and his pro-crypto policies. Trump has been vocal about his support for the cryptocurrency industry, pledging to make America the crypto capital of the planet and create a strategic reserve of Bitcoin. This bullish sentiment has been further amplified by Trump's move to remove Gary Gensler, the SEC chair, who has been seen as a roadblock to crypto innovation. These developments have sparked optimism among investors, driving Bitcoin's price to new all-time highs. Coinbase CEO Brian Armstrong has expressed hope for clear rules for digital assets and is eager to work with Congress to achieve this. Analysts like Russ Mould anticipate further price increases for Bitcoin, predicting a potential breakthrough of $100,000. However, other experts like Susanna Streeter warn investors to exercise caution and only invest what they can afford to lose. The overall market sentiment is heavily skewed towards the long side, which could create a risky scenario for weaker investors. Let's take a look at the chart data and see if it aligns with the bullish narrative surrounding Bitcoin. If we examine the daily chart, we can see that Bitcoin has been on a steady upward trend for the past few months. This rally has been characterized by strong bullish momentum, with each successive high exceeding the previous one. The price has broken through several key resistance levels, indicating strong buying pressure. The current price level, just above $76,000, is significantly higher than the previous all-time high. The volume associated with this surge has been impressive, further supporting the bullish sentiment. However, it's important to note that the price has also experienced some corrections along the way. These corrections are to be expected in any volatile market, and they are not necessarily a cause for concern. The key is to identify potential support levels that could act as a floor for the price. If we look at the price action from the past few weeks, we can identify a few key support levels that have held. The first is around $68,000, where the price has bounced back twice. The second is around $64,000, which has also provided a good support level. While the daily chart paints a bullish picture, it's essential to delve deeper into the shorter timeframes to gain a more nuanced understanding of the current market sentiment. Let's shift our focus to the 1-hour chart. The 1-hour chart reveals more short-term fluctuations, providing insights into the immediate price action. We can observe a pattern of bullish candles interspersed with short-term corrections. These corrections are typically shallow and are quickly overcome by the bullish momentum. Looking at the recent price action, we can identify a few key support levels on the 1-hour chart. The first is around $75,000, where the price has bounced back a couple of times. The second is around $74,000, which has also acted as a good support level. These support levels could provide an opportunity for short-term traders to enter a long position. However, it's crucial to remember that the market can be unpredictable, and even strong support levels can be breached. Therefore, it's essential to have a robust risk management plan in place. To gain an even finer perspective on the current market sentiment, let's zoom into the 15-minute chart. The 15-minute chart reveals the most granular price fluctuations, offering a glimpse into the immediate market dynamics. We can see a high frequency of bullish candles, indicating strong buying pressure. However, it's also possible to observe occasional bearish candles, indicating potential short-term selling pressure. These fluctuations are typical for the 15-minute timeframe and are not necessarily a cause for concern. The key is to look for patterns that could indicate a reversal of the current trend. For example, if we see a series of bearish candles with increasing volume, it could be a sign of a potential short-term correction. On the other hand, if we see a series of bullish candles with increasing volume, it could signal further bullish momentum. Now, let's recap the important price levels we've identified on the charts. On the daily chart, we've observed key support levels at $68,000 and $64,000. These levels could act as a floor for the price if Bitcoin encounters a correction. On the 1-hour chart, we've identified support levels at $75,000 and $74,000. These levels could provide an opportunity for short-term traders to enter a long position. However, it's crucial to remember that the market can be unpredictable, and even strong support levels can be breached. The 15-minute chart reveals the most granular price fluctuations, which can be helpful in identifying potential reversals. It's important to monitor the volume associated with these fluctuations to gauge the strength of the sentiment. Overall, Bitcoin's price action is currently bullish, but it's essential to approach the market with a cautious mindset. Keep an eye on the key price levels we've discussed and be prepared for potential corrections. Remember, investing in Bitcoin carries significant risk, and it's important to only invest what you can afford to lose. Thanks for watching, and remember to subscribe to Explain the Charts for more in-depth chart analysis and market insights.